Hello everybody, welcome back to my channel. I am Joy Bailey, I am the mortgage boss, and today we're gonna have a heart-to-heart conversation because some of y'all are getting denied for home loans and you are not saying or doing the right thing. So today I want to talk to you all about what should you say or what should you do in the event that you are getting denied for a home loan. If you guys are new here, I provide information for first-time home buyers about buying tips, credit information, all that jazz. I also provide information for aspiring or new loan officers in that 0 to 3 year range. So if you're not subscribed, please go ahead and hit the subscribe button. And please make sure that you like this because I do need the engagement. Now, as a loan officer for nearly 9 years, I have worked for banks, which tend to have a lot of overlays and more restrictive guidelines, and I have worked for non-banks, which tend to go straight with whatever the guidelines say do. And so my pull-through has been above average regardless of where I have worked. So what is pull-through? Pull-through is we talk on the phone. I say that you can buy a house and you can actually buy a house and close on that loan. Like I said, historically, it has been higher than average. But lately, I'm noticing that my numbers are slipping. And my numbers are slipping because of some of the conversations that buyers are having before they get to me. So I want to talk to you about what you need to say, how you need to say it, what you need to write down, and what you need to say to the next loan officer in the event that it is actually necessary for you to go and talk to a next loan officer. Because a lot of y'all, truthfully speaking, are going to the next loan officer. You don't need to be going to nobody else. You might need to go to God in prayer. We all need some prayer right about now. But this is too, your realtors need to know and understand this information instead of dragging you all over town hoping for some sort of miracle that isn't coming. One thing that the people that have worked with me absolutely have loved is the educational value that I bring. I do personal home buying seminars on a Zoom call for a whole hour. We're going through everything. So the people that work with me, they know the answers to these things, and loan officers should be providing this. So whenever you get approved or declined for a home loan, it is based off of a minimal things. Your income, your credit, and your assets. That's it. And then, of course, the debt that you already have, but we'll get to that in a minute. So let's chunk it. So the first thing is you need to figure out what kind of loan product was used. Was this a conventional loan or was this an FHA loan? And you want to ask specifically. Your question should be, why did we do a conventional loan? Why can't I do an FHA loan? Or why can't I do a conventional loan? And you need to get an answer that is clear and concise, and you need to write it down. Because the guidelines for each of those different products, some overlap and then some don't. But you need to specifically be able to articulate to your realtor or to anybody else that you speak to, hey, I can't do an FHA loan because la da 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 da. Hey, I can't do a conventional loan because of the way they calculate my student loan. I don't know, whatever the thing is, or because of the way my income is being calculated, or whatever the thing is, okay? This leads me into your income. You all need to specifically ask the question, how was my income calculated? If in your mind you thought your income would be calculated higher, you need to say, okay, well, this is how I got my number. How did you get your number? Every single mortgage lender in the nation has an underwriting department, and that underwriting department uses an Excel spreadsheet. It's a calculator. They go in and they plug in the numbers, and that's what they come out with. That is not a secret. This is public information that is Googleable. If you go to websites like MGIC, which is a mortgage insurance company, or if you type in mortgage insurance in your Google search and you look for income calculation worksheets, you can find this and it will walk you through exactly what to enter on each line so that you're able to come up with an income calculation as well. Yes, it is true that some lenders are going to be a little bit more aggressive than other lenders are going to be as it pertains to how they calculate income. However, it does give you some sort of baseline on what the income is most likely going to look like. If you work at a school, in a school system, you're getting $37,000 no matter what. There is no magic that's coming along with that. There is nothing that's variable about that income. This conversation that I'm having and this tip that I'm having about income calculation is more for variable employees. Are you an hourly wage earner? Do you have overtime that you add into your income? Do you receive bonus income? Do you receive some sort of commission income? Are you self-employed? These are the type of incomes that I'm talking about whenever I'm saying, hey, push back a little bit and ask the questions. Exactly how did you calculate this income? If your loan officer says, oh, I don't know, that can't possibly be true, because I know for a fact that income calculation worksheet is in the file somewhere, and he or she needs to be able to talk to you and walk you through it. They may not be able to email it to you, but there is an opportunity for you all to have some conversation that is intelligent enough for you to be able to jot down some notes, understand the why behind it, and converse intelligently with the next loan officer you talk to, should it make sense for you to talk to another loan officer. Up next is your credit. Okay. I want to say this politely. If your credit sucks, your credit is going to suck everywhere. If you have a 454 credit score here, you're going to have a 454 credit score there, in the next place, and every other place. However, here are the questions you need to ask that may be beneficial if your credit score falls below whatever the minimum credit score is that they have there, okay? Question number one, what is your minimum credit scores that you all allow at this institution? The follow-up question to that is, are there any overlays that exist? So for example, we all know, it's widely known information that FHA generally requires you to have a 580 FICO score to be able to do 3.5% down, and so on and so on. Some lenders are going to require it be a 620 credit score or a 640 credit score, depending on what's going on in the market and the risk appetite that they have at that time. So if they're saying, okay, you have a 575 credit score. Oh, okay. Do you all have any overlays? Yes. What is your minimum FICO score that you all require? Well, for FHA, we require a minimum of 620. Okay, now you know that you need to do two things. One, you need to find a lender that can do 580. And two, you need to figure out how to get your credit score bumped up. Which leads me into my next tip. Ask specifically, do you all have Credit Expert? Credit Expert is a software that allows the loan officer to run your credit report through the system, and it will spit out recommendations on how to increase the credit score to X. So whatever that next number is that is going to allow you to go from whatever number you're at now to that next number, it will say, hey, pay off your Capital One credit card or pay down your Capital One credit card by $500. Get the balance down to $17,000. Get this, or it will be very, very concise and very prescriptive in saying you could go from, in this example, $575 to a $635 by doing these 4 things. So ask specifically what I just say, y'all. Do you have Credit Expert or some sort of tool, and kind of describe what I just described to you. Lastly, under the whole credit umbrella conversation, you should ask, do you all offer what's called rapid rescore? So I personally am able to couple both of these things. I can do the Credit Expert, say, hey, you can get from a 575 to a 620 or whatever the number is by doing these 4 things. And then once you say, okay, Joy, I did all these 4 things, I'm going to ask for some documentation from you, and I can submit it directly to the credit bureaus for what's called a rapid rescore. The rapid rescore means we're submitting documentation directly to the credit bureaus, so you don't have to wait a full 30, 45 days, potentially 60 days for it to be updated, on your credit report as you would normally see it be updated, because there is a minimum of a 30-day lag between what happens, the credit event that happens to you, and when it actually shows up on the credit report when it's updated monthly. The creditors don't update everything every day. They update once a month. And so let's say they update everything on the 5th and you pay your balance off on the 7th. You're not going to see it updated for another 30 days. So you need to ask for 2 things. You need to ask for Credit Expert and ask for rapid rescore. Next up, we need to talk about your assets. Assets is money. If you don't have none, there ain't nothing to talk about. You know when you're filling out these loan applications that you don't have any money. Like, we have to be honest, and we got to start calling a thing, and this is a real thing. You got to stop going from lender to lender to lender to lender, asking for something that doesn't exist. There are different down payment assistance programs and options, but I'm not the loan officer that's going to paint some fairy tale lie to you to make you think that you don't need to have money, because you got to have money to buy a house. You cannot buy a house with no money. And I stand firm on that. It makes your life significantly easier because assets will allow for you to pay items off, per what I just said about the rapid rescore and the Credit Expert. Why does somebody need to run a Credit Expert for you to tell you to pay down stuff when you have no money to pay anything down? That's not a reasonable solution to your problem of not being able to get qualified. So you gotta have some assets available. Your question to yourself needs to be, did I tell them all of the assets that I have? Did you include your 401k, your stocks, and any other type of investments? Or did you only submit your checking account or your savings account? Make sure that you have included everything possible so that they are working off of accurate information to be able to get you to the next step. Okay, and last but not least is the debt to income ratio. Your debt to income ratio is based on the amount of monthly debt that is having to be paid every single month as seen on your credit report. What that means is, as a lender, we're looking at your credit report, and let's say you have 5 different trade lines that are currently active and you have balances on these 5 different trade lines. We are going to look at your trade lines from greatest to least. And when I say greatest, I don't mean you owe $300,000 in student loans. I mean you have $1,000 minimum payment due on an installment debt. You have a credit card that you pay. Let's say you owe on there, and you have I don't know, $200 due on that card. You have a couple more cards that's $25, and then your student loans or whatever. We're going to try to figure out a delicate balance of the following. One is there anything that can be paid down close to where you could get to 10 months or less on an installment debt? An installment debt would be like a car. It would be like, installments, like installments. Maybe some sort of personal loan. It's a closed-end credit that eventually you pay this one amount every single month until you get to the end of whatever the agreed upon amount of months were, and then they close that account out and you're done and you move on and they move on. If we can find installment debts that we could get down to 10 months or less, depending upon, my first thing, is it FHA or is it conventional? So depending on the type of loan product that you're applying for, if you could get that down, that may help you. The other thing is, we are looking for, like I said, the amounts that you owe. Let's, just for the sake of conversation, pretend that you have something that you pay $1,000 a month on, and you have, I don't know, 8 payments to go. That may be able to be completely eliminated, or by you paying it off, or we might see that you have only 8 payments to go, and we may be able to just completely not count that against you. So we're looking for opportunities to where it doesn't cost you a whole lot of money up front out of your assets, because you got to have assets, remember, to be able to do anything. So we're going to look for, where's that sweet spot of you don't need to use a lot of your assets, but it's going to have a maximum impact on your monthly debt to income ratio. Saying to a lender, oh, I can pay off 2 credit cards, but those 2 credit cards only help your debt ratio improve by $45 a month, that is not helping in most cases. We're most likely looking for huge swings, of a couple $100 a month to help, you either qualify for more or to allow you to qualify at all. So your debts, if you are looking to improve your debt to income ratio, you either going to improve the debt by having assets to be able to pay stuff down or pay it off, or you have new income. And when I say new income, I mean like a new full-time job or something like that. It can't be a, hey, I'm just getting ready to go get a side Uber Eats job and include that. That is not going to work for you. So your question needs to specifically be, is there anything that I'm able to pay down so it can be excluded, or is there anything that I can pay off that would allow me to change my debt to income ratio in a significant enough way that I will be able to qualify? All of this information should be given to you. I tell my people that up front. I look at them in the face. I'm like, look, it ain't nothing we could do. You have a 65% debt to income ratio. You make $3,000 a month, and you got $1,000 in the bank. There's nothing that I can do. You got somebody else that you can add to the loan? But in that case, when we have that kind of conversation, that's usually at the very beginning, and rather than at the end. Because I'll be able to look at it and see that, hey, this doesn't look favorable. So you got to ask the right questions to get the right responses. Because what I was saying earlier is I'm getting people coming to me saying, oh, yeah, so-and-so said they couldn't do my loan because of my income. Or they couldn't count my income. Or they couldn't calculate my income to be so-and-so. But completely don't mention that there's this amount of debt that's impacting the equation. They don't mention, oh, well, it's because, there was so-and-so and such collections on a credit report. You got to ask these questions. How did my debt ratio get to be this? And be very specific. Write down what they say. Because like I said, some things can change, but more often than not, your loan officer has probably looked at everything up and down and inside out, and they've probably exhausted every possible option, particularly in 2023 where deals are kind of hard to come by. So guys, I really hope that this was worth your time. It went a little bit longer than I expected it to, but I think it was very valuable information. You guys took notes. Please make sure that you talk to your lender or you talk to me and you are getting the proper information and the proper education so that you are not positioning yourself to put yourself really in a situation where you're going to lose money if you're going out and you're putting up earnest money, due diligence, and things like that, and then you later on down the line find out that the deal isn't going to work because it isn't strong enough, because the right information was not provided to you by the lender, or you did not ask the right questions if someone has denied you. These questions can make the difference between you not being able to get approval at all, or you not being able to get an approval by that particular lender. If they said, oh, we can't do it because we have an overlay that says such and such and so and so, great, cool. Let me go find another lender that does not have that. Also, make sure that you're saying, is there anything else that you see that I need to address? Have the whole list of things. Don't stop at just one thing. Oh, it was my income. Well, what about the income? Okay, what else did you see? Was there anything else? Was there another reason why? Find the questions out. Ask these questions. Get these answers so you could get into your home. Y'all, please make sure that you have hit the like button and you subscribe and share this with your friends too, because I really feel like this is probably one of my better videos, okay? So anyway, all my contact information is below. If y'all want to book an appointment with me, a consultation, so we could talk about your home ownership goals, please let me know. I'm here to serve you. Y'all have a great day. Bye.